Hello, hello, hello. What's going on, everybody? Welcome to Stock Trades. Hope you're having a beautiful weekend, beautiful Sunday here. First off, I want to apologize. I've had some technical difficulties in the morning right now with this video. For some reason, I'm not able to share my entire screen. Now, you may be saying, "Well, Al, I see this screen. I see it." That is true. You do, but the problem is if I was to show you Weeble or something, it won't. In terms of like the technical analysis chart, it won't allow me to do that. I would have to manually do it. So I don't know why, but we're gonna go ahead and just deal with the cards what we have left, and it's the live is gonna run smoothly, but it's not gonna be as smoothly, if that makes sense. But regardless, we're gonna go ahead in this video talk about our recap analysis on the IWM Russell 2000 and SoundHound. Just very quickly, Clover last week did really well, up 10.49%. The whole point is it looks like it is, if you look at the year to date, it looks like it is somewhat recovering. So we'll see and keep an eye out. It looks like higher highs, or so at this point, higher lows. So it's pretty good. That I did not know. I did not know he deleted it. I didn't even know he created one. If you have a screenshot, definitely send it my way. Quickly, United Healthcare wins lawsuit forcing government to revise its Medicare Advantage ratings. This is actually going to help Clover Health because it has to do with the call center, and Clover Health's call center is not its strong suit. So it's actually really good that they actually did this. And the cool part is United Healthcare used its lawyers, so Clover doesn't have to endure any operational expenses to pay the legal team. United Healthcare kind of took one for the team, right? Quickly, if you don't remember, I made a video more than a year ago, and I titled it "Small Caps Are Set to Explode: Navigating the Potential Recession Ahead," because a lot of people were thinking that we could get into a recession, and people still think that, right? And potentially it could be true, right? But overall, let's see when we posted this. Unfortunately, this only got 675 views, and we called out the small cap rise before anyone on Wall Street did. But again, unfortunately, people know and people don't know, and people that are watching us right on a Sunday, you guys know the power of our research, right? So here's the video that we published, why small caps are set to explode, and we published it on August 30th, 2023. So let's just kind of, because it's always good to reflect. October, I said August, I'm sorry, October 30th, 2023. And if you go to IWM, which is Russell 2000, and you go down here, which is October 27, 2023, it jumps all the way up to November. So we called it out on the weekend. So we pretty much called it on its low, October 30th. And if you were to look at from October 30th of when we essentially made this video, our small cap set to explode. If you don't believe me, it's here, October 30th, 2023. Since then, a freaking small cap futures is up. Let's go from here. Is up 47.2%. That's huge. That's a collection of 2,000 stocks. So, you could go ahead and watch that video to see what we were talking about in terms of the research we were doing. We were doing a lot of research. Lots of research came into it. I mean, this was a lot of research we were doing, right? The work speaks for itself, and go find people that are if your financial advisor's this good, hell yeah. I'm not calling myself a financial advisor, but what I'm telling you is you could learn how to do this because we're an educational platform. You could learn how to see Wall Street's future moves before they come, right? So there's that. Now, for this video, we're also going to talk about our call out for SoundHound AI stock, right? The sound stock. And I said, how to calculate intrinsic value for SoundHound SOUN stock using our platform. Here's the video. Instead of redoing the calculation, we're just going to go ahead and rewatch the video at like 2 times the speed. This one was published on October 20th, 2024. So if we were to look at the stock, which I'd have to go here and look at October 20th. Where's October 20th? We'd have to go here. So let's zoom in a little bit. So when did we publish it? October 20th. There it is. Like last month, we made the video. This one received around 1,100 views, which is actually pretty good. October 20th was around here. So it was, again, on the weekend. So it's around here. Since then, it's up 53.06%. Right? 53.06%. So you could see kind of, you know, it went up, right? There's nothing else to say, right? The question is why, and we could just rewatch the video instead of me regurgitating it. We could just watch it because I think this was a really good video. We'll do it 2 times the speed. And then we're going to do that later. First, I want to just talk about some research here, okay? We're just going to kind of recoup what we talked about and kind of where we're headed and just kind of a recap. The new Treasury Secretary is hedge fund executive, so market going to explode next year. Yeah, well, that's what a lot of people are thinking for sure. You're definitely better than most licensed financial advisors. Well, here's the thing. Yeah, exactly. I'm not licensed at all. Take everything I say as a grain of salt, right? But the beautiful part is, you know, I'm just teaching you how Wall Street does. I'm just trying to teach you guys. I've been doing this for more than a decade, and I'm just trying to show you guys how these folks are doing it. And the question is kind of like why I'm doing this. Well, because I got kind of sick and tired of the rich getting richer. I mean, like literally, here's Nancy Pelosi making millions of dollars off the backs of the American people with their insider trades and all this other stuff. And it's like, you know, here are Americans literally easily accepting this. I mean, seriously, if your neighbor was shitting on your lawn, you know, if your neighbor was literally, you know, if your neighbor's dog was pooping on your lawn every day, I mean, when are you going to say something, right? When are you going to do something? Like, are you sick and tired of getting used as Americans? How about people of the world? I mean, at one point, are you tired of working for the big man? And if you don't, and that's what you like to do, then that's fine. Don't watch the channel. This channel's not for you, right? But at some point, there comes a time where you're like, why am I not winning, right? And that's kind of what, you know, is here, right? So it says here, can you answer a question? Is this alive? Yeah, so it is alive, but remember, I'm not a financial advisor, right? So I just kind of ask like general questions, like in terms of clarification and whatnot, and just kind of what's going on, right? But I can't, again, nothing I say is financial advice. I can't give personalized financial advice, right? I'm not an advisor. I'm not licensed. Think of me as someone on the street, because that's what I used to, that was my old life, right? So think of me like that, right? It says here, Al, I hope you stay on YouTube. Not a lot of us can afford the Discord. So unfortunately, that's the thing, Smiles. You could see our call outs. I mean, you make a lot of money, as you can see. The sad part is, once I start my neurosurgery residency, I'm not going to have time, right? Because my goal at that point, whatever, I start like my training or whatever, my goal is to learn that and become a master at that, right? The problem is, if I don't do my job correctly, someone gets hurt. So there's going to be a time where I'm not going to make a lot of videos, right? I may make one maybe once every 3 months, 4 months, 5, sadly, once every 6 months. Who knows? Maybe once a year. I don't know, right? Here's a kind of comment. Smiles, you can make payments. This investment is worth every penny. And that's the thing, speak to the people that have purchased the lifetime access. Speaking about it, I think this is a good segue, honestly, for it. For folks that don't know, haven't heard this, we have a Black Friday coupon code. A coupon code Black Friday. Get $750 off at alstocktrades.com for lifetime access. Yes, that's lifetime access to any future updates of whatever we create in this platform. That's lifetime access to over 2.5 billion outputs of institutionally graded data. That's lifetime access to all the individuals that are inside of the stock terminal that has a net worth of $55.3 million. And it's on track to becoming in the $500 million. Even, who knows, we might even get to $1 billion net worth together, right? It's pretty good. So that's the thing. Al is the Oracle from Arizona. And that's so funny. Honestly, man, I love that comment. I love it. But I am nowhere near the shoulder of Warren Buffett. You know, I'm like literally at the bottom of his foot. You know what I mean? Now, the beautiful part is something that Warren Buffett couldn't do is you couldn't bring this to retail investors and explain it in an easy to understand language. He uses too much obscure language. And the problem is it's not his fault. He's just from a different time. That's the only issue. I get you. I just finished my master's this month and will hopefully start in the workforce. I'll afford it soon, I hope. No, of course, you know, take your time. But I'm just letting you know, the platform works. Again, I'm not going to put, especially a future doctor, reputation is all we have in medicine, right? I'm not going to go in and taint my image. I work so hard for my image. My research speaks for itself, right? So that, the platform works. You know what I mean? I stand by it, right? And we have a lot of people that supported it early on, and they made testimonial videos. If you go to lstocktrades.com, they made testimonial videos. They stood behind me because they stood behind me from day one, and I appreciate you guys. Okay, all right. How you doing, Manu? Let's see. When Clove gonna explode? I know we up 250% on a year, but I'm hungry for $5. Honestly, man, I'm hungry for 10. I'm hungry for 20. We're gonna get there in time. In time. He's not a financial advisor, but I took his own advice and bought the day after last month. Hey, man, again, take everything I say as a grain of salt. I need, the whole point is I'm teaching you kind of how I look at something. And the goal is you can just, do it and then look at it your own way. And then maybe, go like read other books or something like that. And then compare and contrast and see hey, man, is this guy, use it as an educational perspective. You know what I mean? Right? Are you watching me, Al? I have a Gen Z who does dog sitting and lets his client's dog use my lawn as a toilet, and he does nothing about it. Oh man. Yeah. Honestly, you know why I got that example? I'm watching King of Tulsa, with Sylvester Stallone, the mafia guy, right? He's not a mafia guy. I know him as Rocky, but in the movie, he's a mafia guy. He's like a capo or something, right? And then his friend or whatever from Oklahoma or Tulsa, some guy was pooping on his lawn, and then he got to a point where he's like, you know what, I'm done. I'm done with this neighbor having his dog poop on his lawn. At some point, you can only take so much. At some point, how many times you're going to see we don't have a middle class anymore? Oh my God. Like all those folks that say those things, you guys are all NPCs. You guys are all non-player characters, right? Get up and go do something about it, right? You have the internet. You have the freaking data now at your fingertips. All you NPCs out there, wake the hell up. You can become a millionaire. Yes, you can. Yes, you can. If I did it, I'm telling you, it's going to sound cliche, but if I did it, you can do it. Listen, I grew up with no freaking roof over my head. All right. And the lifestyle I'm living now is like that freaking song from Biggie, about the whole popping champagne bottles or whatever the freaking now we drink champagne when we thirsty. Holy moly, am I drinking the type of champagne, right? Problem is that if I drink, I have to take ibuprofen because I can't handle alcohol. If I drink ibuprofen, I drink ibuprofen. I don't recommend that, but I can't handle alcohol. I can't even handle kombucha. I got a headache. It's not worth it. I'm done with the drinking, right? It's stupid to take medication when you drink. But anywho, regardless, that's the life that I'm living, right? And the thing is, it can work for you. All right. Not a lot, but for the entry, and now I'm up 50% on soon. There it is. You're up 50% in a month. I mean, what the hell, right? So let's watch that video to see what's going on. But first, let's do the due diligence. Let me go ahead and go smile. Go the pay to own route. Continue to invest in your education. Yeah, exactly. So We have a firm. Again, I try to, again, a firm, listen, guys, a firm takes like 10%. Like these people, they take a lot of money from the lifetime access. I do that on purpose so people can, because think about it. Someone reached out to me and said, "Hey, Al, again, not financial advice. I'm not encouraging this, but I'm just saying, oh, wow. He was like, "Hey, Al, I'm going to use a firm and I'm going to let them hold the bag while I use the options analysis, and I'm going to go ahead and do options, covered calls, and cash secured puts, and that's going to help me with my payment. Instead of flat out right paying it all, I can just do the option stuff." Okay, there it is. Multiple ways to skin a cat, right? Not saying that that's the right way to do it or that's their way to do it. Again, I'm just really impressed by just the creativity of the people that join the platform, right? Again, this is one of the only platforms you can buy that will help you make money on Black Friday. You go to Macy's, you go to Dillard's, you go to Salvador Ferragamo, you go to Oliver, you go to Cartier, you go to a Rolex. It'll take you about 8 to 10 months to get a Rolex, right? You go to all those places, Hublot, they will take your money and you won't make shit. Nothing you will buy on Black Friday will make you money except this platform. And I have a whole bunch of people that can tell you and agree with that. All right. So there are more than 50% of Congress doing well in stocks, and I believe the top 10 and 6 GOPD and 4 Dems. Nancy is the most prominent Dem in the top 10%. The one is the GOP senator. I forgot his name, and he's in our stock terminal. He just doesn't have a memorable face. I always say Nancy because there's a lot of coverage on her because with the IPO on Visa. Yeah. But again, it's not just Nancy. It's GOP as well. Grand Old Party. Patrick, you're my hero too. Yo, Tulsa King, did you see the set? Dude, do not ruin it for me. Please do not ruin it for me. I want to see the season 2 finale. I'm rewatching season 1 because I don't remember a lot of things. Oh yeah. Yep, good show. Yeah, I'm watching it. Hell yeah. We barely have a mid-class now. Imagine when Trump comes in office. I mean, yeah, I don't know, right? I picked clove out of my butt almost 4 years ago, and the only reason I didn't dump it was because it spiked to 28, and I'm waiting for 28 again, right? Are you doing weekly or monthly cover calls? That's the beautiful part about it. I do all kinds of cover calls. I do weekly, right? I do monthly. Heck, sometimes I do 2 months, right? And I don't do anything. So one time I did 6 months, right? Stop consuming and invest. There it is, driver. Exactly, right? Black Friday, you got a lot of consumers. You got a lot of NPCs. NPCs going ahead and buying. And oh my God, I want this. I want that. None of them invest in themselves. This is the only platform where you're going to make money. Okay. It's easy as that, right? You should watch great show. Hold on, let me write that down. Hold on. Wait. Let me write that down. Give me a moment. I'm serious about this stuff. I like a good show, all right, good. It's not Zona. Al is the only squiggly line chart drawer I trust. Yeah, I mean, there's a lot of them. Pingu's amazing. Okay, I'm definitely gonna watch it now. All right, back to your showcase. Okay, so what the hell are we looking at here? This is the New York Stock Exchange high versus low graph. Okay. I want this to be interactive. Okay, let's make this interactive. Okay, I'm not going to listen, guys. This is going to be a very terrible live if you don't interact. I will stay here and we'll waste each other's time. I want you to tell me, what is this graph time frame from? From what year to when? Can someone say it? What's the x-axis here? From the bottom of the graph, the timeline. What does it go to? All right, guys, come on. Come on, tell me. What does it go to? What is the timeline on the x-axis? Okay, no, not necessarily. 1965. Good. 1965. So it goes from, how do you do that? You read here, right? Right bottom there. 1965 to 2024, 2025. Pretty much to the current, near 2025. I mean, we're pretty much can you believe it, guys? It's already going to be 2025. What the hell? What the hell is going on? Okay. So good, 1965. Good. All right. So what this graph is showing you is it collects all of the stocks in the New York Stock Exchange, and it tells me if they're at their 52-week high or if they're at their 52-week low. I'm going to say that again. This graph tells me it collects all of the stocks in the New York Stock Exchange, and it tells me how many of them are in their 52-week high and how many of them are in their 52-week low. Let's go to dates where we know it was a bad day. Okay. All right. Let's go to 2020. We know 2020, the stock market crashed because of COVID. It kind of looks like a small dip here, right? But the stock market crashed because of COVID. Look at that. What does that tell me? That tells me a lot of stocks in the New York Stock Exchange was in their 52-week low. This is great. That tells me it is a lot of stocks there are probably undervalued. Let's go to 2008. Right here. This is 08. You see? So what am I trying to tell you? Every time you see this dip down to hell, it is a perfect time to buy. Now imagine if you had access to this type of data. While everyone else, there were people that I spoke to that owned a restaurant that said, I don't believe in the stock market. In 2008, I lost a lot of money. In my mind is, man, I am not educated. I don't understand the stock market and blah, 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 blah. The stock market's gambling. That's why the top 10% of the richest people own 90% of the stock market. And guess what? You ain't in that top 10%, and you will never be in that top 10%. Okay? So the point here is that imagine so you were born in 1965. Now imagine if your father had this. He would have known. He would have known that in 1970 was a great time to buy. He would have known in 1975 was a great time to buy. He would have known that in late in the 1989 it was a great time to buy. And that was another recession. 1990, right when Bush to Clinton, there was a little recession, right? Then you had that dot-com bubble crash here. Great time to buy. 08 financial crisis. Great time to buy. Different time points of when the Federal Reserve were changing the treasury yields, which if you go to alstocktrades.com and log into your mastering course, you'll be able to look at the recession snipers and look at the overall simulation test that shows you the different types of treasury yields and links to the stock market and how they perform and understand that relationship, right? So here's a more zoomed in version that shows you COVID. You could see COVID was just down at like a dagger. Now, the problem is when the stock market falls down, a lot of people start selling. And guess what? I then pull up all the data around, like almost think of me like I have virtual glasses on, virtual reality. Okay. And let's say it's augmented. And I'm sitting in a room where I have graphs all around me, circulating me in my desk. I have 20 graphs in front of me, 5 to 10 graphs to the left of me, 5 to 10 graphs behind me, and about 20 to 30 graphs behind me and to the right of me. And I just circle my chair and I look at all of these graphs and I conglomerate them together to form a thesis, an investment thesis. And while everyone's panicking, everyone is selling me their stocks, just like I told you in that Clover Health bullish video. When there's blood on the street, I like to eat meat, and that's what I do. So the beautiful part about our mastering course and its lifetime access, and unlike the other YouTubers that like to sell you fake stuff that is yearly to where you have to leave and they recycle people, right? I want people to stay. Because the greatest money that is to be made, ladies and gentlemen, is when we get our next recession. And the beautiful part is if you think right now we're making money, just wait until we get a recession. And that is when the beautiful part of our lifetime access stock terminal becomes very, very, very valuable. Then we know how to attack. And that's when we're going to take our multimillionaires and we're going to get you to $50 to $100 million. Okay. All right. So that's the beautiful part about this. Okay. All right. So, but again, you need the data. You need the data. All right. I know it's my favorite video too. The economy was on an uptrend for years and years. Yeah. So then now, what's going on? So market breadth is suggesting that we are dwindling. Market breadth, for folks that don't know, it's a set of technical indicators that evaluate price action, and unfortunately, it predicts a stock market decline. We are getting a more of a risk-off period, and usually when this happens, the first couple of months it's usually negative, but the more longer term it's positive. Now we've done this before, so we may see some faltering in December. Okay, this is the Treasury yields. You could see that, the rates are rising, and potentially we may get into a risk-off period. We'll see. Okay, but overall, I know. Yeah, Clove is dead. I mean, honestly, yeah, he's back. Lal's cousin is here for the troll. Exactly. That's what I'm saying. And the beautiful part about it is my subscribers are so educated. We're able to kind of pick through those things. But okay, listen, let's focus on this. Okay. So, Nvidia is down 3.22%. Okay. That's interesting, right? Are we headed in a risk-off period? I mean, guys, Nvidia is $3.48 trillion. Okay. You know how much that is? If Clover was that, holy moly, right? If Clover was that, you guys would have, your private jets would have their own private jets. How about that, right? So I'm looking at this right now, and I believe take-home message, short-term market will be choppy, long-term market sexy. That's how I look at it as. Now, let's go ahead and go to SoundHound, because we called the stock out on October 20th, 2024. And if you look at October 20th, 2024, SoundHound is up, where is it? It's right here, around that. It's up 53.06%, right? So there it is. So it's up that much. So now let's go ahead and watch the video on SoundHound real quick. Right? So sadly, this video is not about Clover. It's about SoundHound. Right? Get with the times, brother. All right, let's see here. So let's go ahead and stop the sharing of the screen. Let's just listen to this one here. Instead of just rewatching the video, just let's watch it. Let's watch it 2 times the speed. Let's go. Hello. All right, can you guys hear me now? Better microphone, better mic. How's everyone doing? What's going on? So you might ask yourself, where the hell are you, Al? What's going on? Well, I'm in the airport. I'm actually in El Paso. So let's see what's going on here. Hello. Okay, good. So first off, let me show you my office. So where the hell is it? There's my office. So you can see Delta Airlines is in the back. I'm not flying Delta. All right, guys. So the point here is we're going to be watching this video that we did a month ago talking about SoundHound. I'm not going to go ahead and remake the video. Rather, let's just watch it to re-update ourselves, because I honestly forgot some of the analysis. All I know is one of the buyers originally was part of our legendary investor, which is part of our lifetime access mastering course that explains to you guys why he's a billionaire and the type of investment philosophy he uses, which is the whole point of intrinsic value calculation. Okay. And it's interesting because a lot of people on our stock terminal have already called the stock out months in advance. So people probably are up 100% or whatever, right? So that's the beautiful part about our people on our stock terminal. They have their fingers on the pulse, and that's the beautiful part, because it's social capital. You are who you surround yourself with. You hang out with 3 losers, you will become a loser. You hang out with 3 winners, you'll become the 4th winner. All right, let's go. You can see the computer here. You gotta have smart water because we're smart money, not dumb money. We got a little coffee here. And we got a screen here, and a screen here, and we have a mic. And I'm sitting right here. So that's my jacket. So that's kind of where we're at right now. We're in the airport doing this podcast for you guys, because again, I promised you to do it last Sunday, but unfortunately didn't have time. So in this video, we're gonna go ahead. We're gonna be talking about this company here called SoundHound stock. Ticker symbol SOUN. I don't know a lot about this company. I need to learn more about it, but I know a little bit more than the average folks. But overall, some of our members said, can you show us an example of how you can calculate an intrinsic value of a company and set your own price target? So in this video, we're going to use this company as an example, because I believe it's still free cash flow negative. So due to that being free cash flow negative, it's going to be one of those 5% rules that I do, because they're still negative on the quarterly basis. I think the most recent is negative 19 million. So using their own free cash flow won't actually help because they're negative. But year to date, they're up 164%. So why are they up 164%? In 6 months, they're up 45%. In a month, they're up 10%. 5 days, they're up 9.78%. 1 day, they're up around 5%. A year, they're up 222%. Again, our stock is outperforming, but 5 years it's down negative 15%. So what's going on with this company? And could we have predicted it? Right. So first things first, let's look at the comment sections. Yo, what's going on? We were getting spoiled. Alan Brace, the herd, Amber Heard. I'm just kidding. Sebastian, how you doing, Sebastian? Ethan. Yes, thank you for responding. You can hear me. Hope you do an intrinsic value. So yeah, I would recommend my friend join our platform. The individuals who recommended this are in our platform and they're messing with the numbers. I just wanted to, it's good to you do it first and then I can go ahead and come in. Oh man. So actually I'm in El Paso now. So where the hell is it? I'm in El Paso. So I'm about to go to Phoenix right now. My flight's going to leave soon. So we're going to get to this live quick. Yeah, chart looks good. Al, are you flying to Vegas? Oh, no, not anytime soon. Flip burgers, baby. McDonald's employee here. Oh, hey, welcome. Hey, anybody can become a millionaire. Kamala's not here today. Kamala. Okay, we're coming. All right, Kamala. I just saw a video of Kamala, and she was giving a lot of gestures, and I just could have just remembered what has been burned by what has been. All right, so we're gonna go ahead and show kind of what's going on here. So first off, there's this guy. This is a pro article. You guys can read it of who he is, but here's what Seth Klarman, the hedge fund manager compared to Buffett, is betting on now. So he went ahead and bet on SoundHound when it was under $5. He went ahead and bought. He cut his position in Warner Bros. And he bought stakes. So who's this guy? Well, if you go to our mastering, he's one of our legendary investors. Okay, so the mastering, I've been doing this for over 10 years, and I found investors that are the best of the best, and he's one of them. So in this, I'm not going to show you the bottom because that's where our members, but this shows you all of here's Blackman, right? This shows you, all of these people's philosophy in investing. So yes, this person bought the stock. He bought it, and it's done really well. Look at it. It's done really well. Don't you find it interesting that our mastering stock market course and lifetime access to our data somehow just did it again, found another multi-bagger. Again, I've given you the most concentrated doses to take you from zero to hero. So I'm glad that we're on top of this one as well, right? So let's go ahead and I'll photo up on the list next. Oh no, you're too kind. So let's go ahead and just open up the stock terminal and get to it. So first thing I like to do, first things first, is open up the stock, open up the mastering here. So we go all mastering. Open up the intrinsic value. Okay, fire that one up. Okay. So there it is. And then we can go ahead and activate our help menu real quick. We're going to go to master analysis, click that button. Then we go to Wall Street, then we type in SOUN sound, and that's going to fetch the data. And that's going to give us some that's going to give us a table. Okay. So let it fetch it. It builds it in real time. Okay. So here's the table. And you can see the revenues is here. So it's around 55 million. Free cash flow is still negative. And it gives you the shares of 332 million. Okay. So let's go ahead and do the math here. So overall, we can take it from 2020 to 2024. So 55 million. So we can just do it this way. So 55 million, 2024. Then we do 2020. We use the numbers here. Where's revenue? 13 million, just to see kind of what's the growth rate. Growing 43%. We're going to go 10 years in the future. We're going to say 55 million multiplied by 0.05 because that's how we estimate future free cash flow. We go here, we get 2.75 million. So we just do 2.7. Doesn't matter where we put it, just take the average. Then we divide by the number of outstanding shares, which is 332. Then we get this price here. Okay. So we get this one. Okay. And that's what it was trading at. That's what the market was evaluating it at. Because if you look at it, the 52-week low is $1.49, which falls right in line with the base case of the intrinsics. In fact, if you go here, the lowest of the low is 93 pennies, which falls in, holy crap, that literally hits our bear case of 93 pennies. So if you look at the low here, the absolute low was right around here in the 90 cent region, literally 90 cent back on December 30th. So if you go to 2022 and just kind of go to 5 year and go to 2022, it was an intraday low probably, but it was near 90 right there, right? It was really low. So the question is, what's going on with this company? Why? Well, first off, this is a voice artificial intelligence company. It's a software. So it's very difficult to use 5% given that the gross margins may be high. So let's look at our gross margins. Our gross profit ratio is 65%, meaning that this company has the potential of taking 10. All right, hold on, guys. So here's the thing. So I'm replaying a video. That's why it's fast. So what I can do is I'll just make it a lot slower because people are like, what the hell's going on? So you may have to slow down the video, slow down on the talking and can't understand when you talk fast. All right, so it's a replay of the video. So I'll slow down the video for folks to make it easier here. So I'll slow down. My bad. Okay. So it's a replay of the video, guys. Okay. It's a replay. If you guys want to see the full video, you could just watch it yourself at how to calculate intrinsic value for SoundHound, and you can watch it from there. But I'll slow it down. And we're at 9 minutes now. I'll slow it down to 1.3, and we'll go from there. My apologies. I'll slow it down. So you can rewind it, and you can click this, and you can click playback, and you can play it back at 0.75. And that'll slow it down even more for you guys because you're watching it at normal at 2x because I'm doing 2x. You do 0.75 and you'll be able to get it done, right? All right, so there it is. So let me go ahead and just kind of make it a little easier for you guys here, and we'll go from there. Hold on. 10 to 20% of free cash flow, 10 to 20% of revenue, and translating it into free cash flow. This is a lot tricky of a business to analyze because you have gross margins improving, gross profit ratios improving. So the overall gross of the company, meaning that for every dollar they make, they actually bring it into free cash flow. Let me go and drink some water real quick. Hold on. So with that, this requires an extra set of tools to look at. So you would have to upgrade your analysis, and you would have to say, instead of 5%, I need to do 20%. Because if you take Palantir and take the revenue multiplied by 25%, then you get ultimately the free cash flow. So there's that. So if you take that and you put now 11 million, look what you get. Now you get an updated target. You get a recession of 167 and a bull of 787. Okay. Obviously, our legendary investor bought near the lower end here, and then he made his money, right? So if you look at the stock, it oscillates between the past year, it oscillates between that $1 region all the way up to that $8 region. There is some pressure on that $8 region, which falls in line with our bull case of near $8, right? So that's kind of how you do this calculation, right? Once you do a lot, and once you every company has, it's either going to be a high gross margin, high low, you can start personalizing the intrinsic value based on that. Now we can go to Yahoo Finance real quick and just kind of see what analysts are thinking. So let's see what's going on here. So yeah, look at this. Their 1 year target. So wait a minute. I see this comment. You're like, oh, my results are not realistic. My friend, go look. We made this video last month, and this stock is up 50%. Probably more than you've ever made in your life, but it's okay. Continue trolling, my friend. You're actually helping with the YouTube algorithm. So continue going ahead. Is $7.79, which literally falls in line to our bull case. You can see how accurate our intrinsics are. And guess what? We have the data now that that unfortunately we have to rely on Morningstar to do. Now we have it to where we can actually do this. Look at the analysis real quick. Let's see kind of where we stand. So they think that the revenue is going to grow 84%. So they think this is going to be a higher revenue. And remember, I use their numbers here, which is 13 million to 55 million of revenue, which is here, 13 million to 55 million, which then we got 43%. Okay, 43%. They're saying that this thing can grow 84%, which makes sense because $55 million is not a lot of money in comparison to a publicly traded company for revenue. So this can go higher. So let's put in 84%. Okay. We'll put in 84.20. And now we get to $15 to $87. The problem is a company, it's unrealistic for it to grow 84% for 10 years. Okay. Let's go back to our 0.05% and let's see kind of the bare bones of 275. Okay. We do that, we get a price of anywhere between sorry for the background noise, I'm in the airport. We get $3.87 all the way up to $21. So this may be the appropriate price. But if you really want to be somewhat looking at how high this could go, you could bring this back up to 20%. And again, I personally would do the 5% as of now because I haven't seen them, but the gross margins are high, so we call 11 million. But instead of 84%, you could take 75% of that. You would get 63%. You get 63%, then you get back to that same price target I showed you of that $21. So this thing can go anywhere between $5 to $26, which is what I think our legendary investor is betting on. Okay. So now let's go ahead and let's look at the price target of what kind of analysts think, which then we can use our handy dandy intrinsic value. Okay. So let's go up, open up the help menu, look at price target. Look at kind of the price target consensus of SoundHound, and you can see kind of this is the $9 and $8, right? So this is kind of what analysts are telling people. But again, they're not going to tell you the whole story. They probably want you to sell at around $8, right? It's a buy, obviously, and they want you to sell out at around $8. But this could technically go higher. It depends if they essentially make it. But there's a lot of people that say buy, and you can use our stock terminal to look at who's basically saying which analyst is saying So we can just, go here and type in sound again and take a look at which analyst and go even further and do more due diligence. So just very quickly, guys, what you're seeing here is We're about to show you what analysts created what price target. Now, normally, if you guys want to do tip ranks, they cost you anywhere between $40 to $50 a month to get analyst price targets. But guess what? We have them integrated within our stock terminal, right? And it's an easy to use platform, and it's open access, so you can see what other people are looking at, right? So it's a beautiful part of doing this. It combines. It's literally a all-in-one platform, right? So we went ahead, calculated our own price target, and then now you're seeing what analysts are saying. And you saw the analysts were thinking $8 to $9, and you'll see a couple of analysts right now by their name. So it's pretty impressive, right? Intelligence. So I think it's this one here. It's this one. You can see kind of who's posting who, right? Right. So this analyst here, Scott Buck, he posted a $7 price target when it was $4.80. This guy says 9. So again, you could follow these people in their performance using our stock terminal. Okay. Someone who I really respect, whom I frequently talk to on Twitter, is Daniel Ives. Daniel Ives is actually a really well-known analyst. He actually was able to predict Apple's crazy rise by looking at their service section, and they realized, so he's really well known. He works at Wedbush Securities, very well known. So for what it's worth, he has a price target of 9. So obviously there's something here. And what's funny? This stock was low as hell while our stock terminal members were actually calling them out. So congrats to all of you guys. But that's how you set price target. That's how you kind of do it. So just kind of reiterate, we did the, you could just rewatch the video, but we did the master command and looked up the overall image. If I can find it. We did the revenue, and we went ahead and did 5% of the revenue. Then we did 20% of the revenue. Then we went ahead and did the 43%, which is the actual growth rate based off of the, from 2020 to 2024. Then we did the 84%, which is the analyst growth rate. Then we took 75% of that, and we got at the same price at anywhere between $21 max to $25, right? So that's pretty much how you do it. So I hope this is helpful. Imagine if, because you technically didn't need the revenues. Imagine if you would have done this when it was 90 pennies, right? All you needed to know was kind of what overall is the growth rate for the company here. And the growth rates has actually been pretty marvelous. Let me just look at the growth rate here. Going from 31 to 40, this is a pretty intense growth rate. So you can go ahead and do that, and you would have been able to predict the stock price and made money. That just shows you the power of the stock terminal and the power of the lifetime access. So if you do find value, this coupon will expire, so take advantage. The price is only going to go up. So here's the beautiful part now. Because we have the Black Friday sale, we're going to stop the sharing of the screen. Because we have the Black Friday sale, instead of the $600, we have the $750 Black Friday. So I would say take advantage of this Black Friday sale, the $750 instead of $600, of course. And yeah, but yeah, here's the thing, guys. You could hold on. Here's the thing, guys. You can go ahead and you can humor this gentleman here. And I don't know if you guys heard me right now when I was saying it's now $750 off instead of $600. So it's because of the Black Friday. The thing is, this guy is obviously, he's a troll. What's the definition of a troll? I don't know. It's not. I guess looks like the internet doesn't have a definition. An ugly creature depicted of either a giant dwarf. I did not know that, actually. I thought, is that really what it means? I guess so. That's what it means. Okay, I didn't know that. Well, my definition of troll is quite different, right? Let's see. What are trolls in social media? There it is. The deliberate act of posting provocative, offensive, or disruptive content on social media platforms with an intent to incite anger, confusion, and controversy. That's literally what the guy is doing. Oh, it's going to go to 60 cents. Oh, IPO. Like, they intentionally say wrong things, and all they want is just for you to engage. That's all it is. But again, it's a part of life. My recommendation is, if you believe in yourself, short the stock. Go ahead and short it. It's a free market, right? So there it is. It's so funny. Yeah, no, again, it's just it's it's a part of the internet. You meet good people, and you meet people that are just like that, right? So right, so there it is. But overall, you can see the due diligence from our platform of what we did and what we called out on October 20th, and you could see within a month we're up 53.06%. So I mean, it's pretty damn good, right? And we also did SoFi. We're gonna have to do a recap on SoFi because SoFi's been doing well. I don't know why. It's kind of funny. You can't really see SoFi stock on the main page, which is I find kind of weird. Maybe if we put SoFi Technologies stock, maybe it might. Yeah, there it is. It's kind of weird. You put SoFi, it doesn't come up, but you can see SoFi's done pretty well. Again, we called it out when it was around $6 and whatever cents, and it's up 146%, right? And we were calling it out. So you could see, our platform works. Yeah, we don't get a lot of views. And I don't know how much of it is people keeping this channel on the down low without sharing it because they want, they definitely want this to stay a secret. But if you are like that, that's shame on you, right? It shouldn't be like that, right? Because imagine how many other people that are hardworking right now trying to figure life out. Don't be the evil that I'm trying to fix, right? Because it's not fair, right? So yeah, our research, you can see it. It speaks for itself. Yeah, there was a time during 2022 where the stock market for Clover fell. What pretty much Laz is talking about, but you could see here it was down here. It's a great time to buy during this. Like I said, COVID 2020, great time to buy. 2022 when the stock market was down, great time to buy, right? Especially with Meta. I mean, just look at it was October or whatever. Meta. Let's just watch 2022 for Meta. All right, let's go ahead. Let's do Meta, and let's look at the last 5 years, and let's look at 2022. Look at that. November 4, 2022. Meta was $90.79. $99. Wait, no, $90.79. It actually went a little lower. Then you went, you saw Jim Cramer cry on TV saying how he doesn't believe in the management team. While all the institutions are loading boat, Cramer's trying to convince retail to sell. And from that, it went up 500%, 5x. And you would have figured that out, that it was a great time by just looking at this graph here. In 2022, you would have figured out that it was a great time. Again, it's all about data. The problem is this piece of data is not going to help you. You need everything. You need the financials. You need to look at the intrinsic value calculation, right? So at the end of the day, the platform and the truth will ultimately set us free, and people are going to basically figure it out in the long term. Now, closing it off with Clover, I think when this thing, let's say, go to 5, goes to 6, goes to $7, and once it continues to grow and everything like that, people are going to wish that they bought at $3. That's just how it works. And ultimately, we're going to get to a point where this thing's going to do it. And again, who knows? We may go down to 2. I hope so, right? I want it to. I mean, then I can buy more shares, right? I can buy more, right? So I hope, honestly, I hope it goes, because again, we know where we're going, right? It's that dog that's driving the boat. We know where we're going. And, anytime short-term movements, people have opinions, but it's okay. I mean, it's like a part of life, right? One thing that I've learned, you don't bet against me, right? I'm not trying to be all pompous or anything like that, but I put in the hard work, right? So folks that want to join the platform and join people that are becoming millionaires every day. I mean, it's not normal that isn't it? Don't you think it's find it weird? A collection of people that every quarter we get an update. I just became a millionaire. I just became a millionaire. I just became a millionaire, right? We have that. We have that in our platform, right? Right? Because that's what works. Okay. You go ahead and you say top Warren Buffett book, and look what you find. Top Warren Buffett book. You find our book, Albert Allen. Okay. So our platform speaks for itself. So overall, I hope you know to see you guys on the platform again. It's lifetime access. You can use it for our American and Canadian members. You can use a firm, and we will be releasing some options stuff um, this week. I think I'm looking at some cash secured puts. We're gonna go ahead and play with that and collect some premium. So we're gonna go ahead and release that and make some passive income. And we'll be talking about that hopefully this week. And yeah, Black Friday will be coming to an end soon, so take advantage of this. And I don't know if I'm going to be making a video, to remind you guys, but yeah, I'm going to be out. I'm going to be out like this week. I might be able to make a video depending on my connectivity, but we'll go from there. Okay. All right, guys. Love you, each and every one of you, and I will see you on the next one.